Alright, I'm gonna go over, just do my trend review and see how these situations presented themselves. So basically, the market, yesterday's uproar, just kept going and going. But then you had this big thrust. So as you can see over here, this big thrust, I mean, in a way, it is a potential change in behavior, not by volume, but um, by the range of the bar. It's the biggest down bar in the entire trend. Now that could be many reasons. It was because I think the session had just closed and then reopened, but still it made significant price progress. So then what happened was price started moving sideways in a range. This range was fairly, I mean, it was interesting, but the key thing to remember is that this was distribution. Now you know that after the fact, because obviously there's a downtrend, at least intraday. But there were certain clues, and I think it was right here where this indicator showed that the down volume here is more than the up volume, and eventually you start seeing this action where observe the one down wave, two down wave, three down wave, four down wave. So in this section here, the down waves from I think about here on up to here, the down waves are bigger than the up waves. Now you finally have a significant up wave where it looks like demand came in, but it was unable to make a higher high. And when demand came in like that, it was immediately taken out by supply. Alright, immediately supply came in, so it kind of negated the up wave, because the up wave made a lower high on 56 volume, 5600 shares, and was reversed by 58 volume, 5800 shares. What am I saying? 5800 contracts. So whatever the case is, this must have been effort, and it went down. And the indications show that the downside volume is greater than the upside volume, and you had breaks here. But one thing that I can't stand, which is happening more often, is the tests. Like, market goes down, down, and then it comes up, and if it can go up a little bit more, you can get filled and get a really nice low risk trade and bank. But it's not doing that. It's like barely hitting the 50% mark. It was only within this range that it went at or above the 50% mark. But once it came out of range, meaning broke ice, broke support on this kind of volume, where you had 58 down, only 12 up, 95 down. So in essence, you just minus the 12 and see the real pressure here is about 150 plus selling. 150, was that 15,000 contracts? So whoever did this basically broke the low, and trend was down, and there was some covering, but it's not anything special. Like if it could just go make one more up wave here, it would have set up a beautiful trade, like at the halfway back, a little bit more. Anyway, so it goes down and then starts moving sideways within this range. Starts moving sideways within this range, then the break comes right here. and now you have this. Now the thing is, I don't usually do this much, but if you do the trend lines, you'll see that price hit the bottom of the trend line, and when it does this within a downtrend, it's known as oversold. Okay, so that's when it's channeling. In a downtrend, the edges of the trend line represent oversold and overbought positions, much like an indicator. Alright, so it goes down, draw peak, and it tags this oversold condition. When it tags this oversold condition, you have 49 and then 36 up. I think this is relevant because 49.36 up is approximately, like, if you discount the 12 down, it's about 85 volume up. So I think there's something coming, because this is from an oversold condition. It's tagging the top of the trend line. I want to see the testing processes and basically look to see if supply is gone. That's what I'm looking for. But you can't just assume that supply is gone, because currently demand is still in control. As you can see over here, supply is still in control. Demand, I mean, there is enough volume here to possibly there could be a change of behavior, and possibly this is the change of behavior if I consider these two volumes together. But trend is still down, and you don't want to just I'll give you an example. Let's say over here there was significant volume coming up and there was some lack of supply here, right? Now observe, like, you have this minor hinge. See that? So you have the rally, a good strong rally that took out the prior high, a retrace, low volume test, and a thrust up. So this was setting up, and it would have potentially worked if the market was uptrending and this was more of a within an uptrend. But the trend is down, and they sold this rally. So I'm not really sure what this is. It could have been preliminary buying, or it could have just been a test. It's just buying in a downtrend. So you don't want to break rule number one, which is if the trend is down, do not go on the long side. I mean, there are ways to do that, but why not? Trading is more about self-discipline and control. If you're trying to make money here or trying to look for an opportunity and stuff like that, it leads to self-sabotage. So just wait. If the trend is down and it gives you a signal and it makes sense, like that, okay, this is good, then you put on the low risk trade, and the same thing on the upside. Either works or doesn't, it's irrelevant. Over a series of trades, you make money. It just is like that. But anyway, so over here, I like the action here. It seems like they encountered some supply here, right? So this, in my opinion, is they were trying to absorb some supply. There's supply in here. Demand goes into that area and is facing resistance, but demand is not stopping. Alright, so we'll see how this plays out and whether there's a rally. If there is a rally, the trend can turn. And from the higher time frame, as we all know, the trends are up. So we'll see if those guys come in and help out, or whether this thing's going to continue down. If it continues down, then I'm going to be looking for a short, but with caution, because this low here it's from an oversold position, and I think they may be defending it, but we'll see. Anyway, that trend review done.